welcome everybody to the Plotting Shed. We're joined today by Derek Bradstock from BBA Finance and Kevin Ellis from Thomas May and the Landing New Homes Network. And we're going to talk about development finance principally, I think, Derek. This is your background and how you two have come to work together recently. So, Derek, what's your background in finance?
Okay, thank you, Chris. Kevin and I have been talking for a few months now, sort of synergies within our business and how we can sort of work together and offer a better solution to our end clients, which are property owners, developers, investors. My personal background, I spent 35 years high street banking on the real estate finance side of it. My clients have always been those sort of end property users, developers, investors. 31 years with sort of RBS NatWest Group. Please don't hold that against me.
You don't look old enough, Derek, if I may say so.
Yeah, I was 12 when I joined.
He was the finest cashier in the branch.
I was. There are plenty of stories I could tell. I've worked for a couple of challenger banks and privately owned sort of property funds as well in London. I saw the light about 3-4 years ago. And decided to join my partner Andrew Barstow, and we set up BBA, a commercial finance brokerage. Our clients are similar to Kevin's, those end users, the property developers, and I specialise in providing bespoke funding advice to them to enable them to buy the sites, develop the sites, assess their finance needs for sort of now and the future.
Okay, and Kevin, that obviously fits into your world very nicely.
Yep.
You're speaking to landowners, developers, estate agents all the time. And
I just think it's a natural fit that, ultimately when you're trying to broker a land deal, it's hard enough as it is. And very often, the funding bit is such a critical element to it. It's the difference between whether you do a deal or you don't, particularly if the terms are right or wrong and, what the position is of the buyer. So it was a natural fit to sort of work with somebody like Derek and his team to kind of really open up the marketplace, I guess, really, isn't it? That
it is, but it's the quality of the professional advice that we want to give.
Yep.
We want to be best in class doing what we're doing. We both consider ourselves to be that anyway, but joining forces, so to speak, and bouncing off each other, and having that other degree of skills to sort of refer our clients to can only enhance their offering, and the service they're going to get, the deal that's ultimately going to be closed for them.
I don't know what you think about this, Derek, but one of the things that I've learned certainly over the last sort of 12 months, I guess, is just buyers' perception of where they think they're getting their funding from, and some of it, as we've exposed quite clearly, you're looking at it thinking, well, why the hell are they doing that? But actually, it's an education piece, isn't it, really, that they just don't know what's out there.
Yeah, quite often it's, they believe better the devil I know. If you have a trusted relationship with a funder, great. It may be working for you. It may be the best fit for you. What I'm happy to do is to, have a look at the market, give some examples of alternatives out there for that, developer. And if they choose to follow that, they pay me, thank you very much. If they don't, stay where you are. And to be honest, if it is the best advice to stay with your existing funder or private investor, that will be the advice that I give because,
I think it's quite timely though, isn't it, that, certainly what we see across the client base is this whole piece, not necessarily uncertainty, but, there's lots of questions being asked, well, is the funding still available and what are the rates and stuff like that, What's your sort of take on that to give a bit of perspective?
I get calls every day from funders that we've worked with for a number of years wanting to know what I've got on my desk, what they can help me with. There's a lot of cash available in the market to fund the right deals. We've been through sort of recessionary periods before where cash has not been available. It is readily available now. We do have a special
guest. We have a special guest.
so
Maxie's in the house.
So do excuse a little face popping up once in a while.
There you go.
This is our Chief Happiness Officer, Maxie.
So Derek, typically where would people go for funding
Well, me,
if they don't go to you, where are they going and where are they going wrong?
Yeah, you key in development funding in the internet, you'll get people that have subscribed to get off lists and up lists in Google, etc., that you can pick up the phone to and speak to. Are you speaking to the right person? Do they understand your business? Are they going to give you their best deal?
Okay. So I do that. I Google that, and I ring somebody. What am I looking for? What should I be wary of?
What are you looking for? Most offer more or less the same. You know, a funder that sets themselves out in the marketplace, and there are hundreds. I think we've got access to a database getting on for 500 different specialist property funders. The bulk of them offer the same. Your development finance at about 65 to 75%, 65 to 70% loan to gross development value, and a similar spread of rates. But how good are they at performing? How good are they when things don't go to plan? Because in a development project, something is going to go wrong somewhere. There's going to be an increase in costs that you haven't factored into your contingency. There could be adverse weather that delays programs. There could be change of management within your funder setup and somebody else having to get to know you and your development. You know, the role we try to perform is to act as that interface between the client, who's good at what he does, building houses, and the funder, who we know inside out and back to front. Christ, I did it for 35 years. And a lot of the people that I go to for funding solutions are guys that I've worked with in the past. So they understand me, I understand them. We can talk through problems and sort them out. You'll get a set of terms from a range of funders that look more or less the same. It's getting behind the detail of delivering on those terms, the minutiae, the devil in the detail, so to speak.
Exactly.
If you're a developer, Derek, you want to just get on with your day job, don't you? And I guess that's the bit that you guys come in and sort of take that pain away. And sometimes you say it's that one or 2 points of detail which actually are the difference between whether it happens or it doesn't.
Yeah, exactly that. Well, you kindly referred me to someone in your network yesterday, and I spoke to one of his clients yesterday afternoon. Exactly that, paying perhaps 25% more than they should do for their funding line, but it's convenient. They know what they're getting and when they're getting it. They're putting in perhaps twice as much cash as they need to for the cost of the funding line that they're paying for. But again, they're comfortable, they know what they're getting. And
is that just a bit of laziness, though?
Well, it is. The client's words to me were, Derek, I hate paperwork. My job is to manage that paperwork. And she likes to pick up the phone to her funder and get what she wants. Well, I come in and act as that funding portal.
You're that firewall that can...
I'm the one she picks up the phone to and said, Derek, how are we doing? What's going on? Where's my money? I'll sort that out and deal with the detail, deal with that paperwork.
But if you're saying that she's putting twice as much in that she needs to, she could potentially then be doing double the deals that
the conversation we had. The conversation we had yesterday, indeed, putting 30-40% cash into a deal, and therefore tying up your equity in one site, and paying over the odds for the cash that you are borrowing. I can get a funding line for her where she's putting 15 or 20% cash in. She can have 2 deals on the go, spreads her risk, and could increase.
But if she
profits.
wanted to put that money in, obviously in a normal situation, if you're buying a property with a mortgage or whatever, obviously the higher deposit you're putting in or whatever, potentially going to get a better rate. Does that apply in that space?
It does apply in that space, yes. There will be.
But she's not getting the benefit of that.
She's not getting the benefit of it. She's paying for the convenience, and it's a sort of a set rate for the convenience.
And Kevin, is that a classic example? Have you come across that a lot where people have taken, not the wrong advice, but they've just been a little bit slack in
I think a lot of people don't know.
Answer.
I think, like a lot of these things, Chris, a lot of people just don't know where to turn to. And we were talking about the one up in Cumbria, weren't we, where you know, a guy, very well placed guy, you know, he's got a good job, but his second hobby or his job or his other interest is building a few houses, and he's sort of been build one, sell one, build one, sell one, and actually he's now picked up a site for 10 units, and we're sort of saying to him, well, okay, well, how are you going to fund this? And you know, let's talk about sales strategy. And he said, well, you know, again, I'll build one, sell one, or build two, sell two. And it's like, well, hold on a minute, that's very knee-jerk each time you're doing that. And as the conversation sort of unravelled, he said he was very much taking money out of his pension, or he's taking you know, family investment or whatever to make it happen. And actually, you know, one or two simple conversations that he's had with you guys, and now we're looking at a facility that actually would enable him to put the groundworkers all in one go, literally get the slabs in. You know, the whole efficiencies through that. You know, it's going to be much more profitable.
Yeah, have one build out rather than
absolutely.
Building two houses at a time when you've got 10 units to do, it's going to take you a couple of years, 2.5 years to complete the job. Getting everybody on site at once with the right funding package, you can build those houses in just over 12 months.
Yeah.
Could be sold and off-site within 18 months. You've banked your profit. Yes, you've paid a bit of interest for the funding costs, but you've banked your profit quickly. You're on to your next site.
Well, there's that economy of scale as well, isn't it? You know, absolutely. If you do it all in one hit, bigger outlay.
Plus, you're going to get a premium on the houses. You don't need me to tell you. You're trying to sell a house, the first two on a site, you know, in the middle of a muddy building site with no certainty of when the other 8 are going to be finished, isn't the most attractive proposition. You're not going to get premium price for.
But I think what was really interesting, the agent who, you know, obviously the lead originated from, you know, the client is really holding them in a really high regard now, because they actually had the foresight to open the conversation. So it wasn't just agents saying, right, sell land, build, you know, sell houses. You know, it's a much more wider conversation that sort of ultimately problem solved and fundamentally helped probably the sales strategy to actually think, well, you know, right, this build program will deliver that, and it will go by then. You know, the whole thing just gives a lot more certainty. And probably their strategy of sort of build one, sell one was fine when the market was going whoosh. Albeit build costs were exponentially going at the same rate. So, you know, who knows what would happen. But I think this solution now would be an awful lot better for the client and probably protects them.
Dictating and telling a client what to do. You're offering alternatives.
It's
I can
almost
offer advice. They choose to take it.
It's not so much, but it's almost an arm around the shoulder, like maybe I wouldn't do it quite. You know, and like you say, you garner more respect by doing that.
I think that's where the advantage of the broker setup of obviously what Derek's doing. When you use the analogy, there isn't the conventional bank manager these days, is there, to take the person through the transaction? No. So if that's a role that the broker can play, and ultimately sort of almost then becomes a trusted advisor to the business, well, that's got to be a win-win. All the way around, I would have thought. So that's kind of the logic behind it. Yeah, no, it's good. Now, Derek, I don't want to put you on the spot, but we can't ignore the news today.
What news is that, Chris?
Well, apart from, you know... What, Matt Hancock going into I'm a Celebrity? Or?
Well, that's what I was going to say. Yeah, right. Interest rates.
Yeah, today Bank of England have increased our interest rates by 0.75%. Very nice of them.
Yeah. Okay, so what's the impact? What's your advice? How do you pour oil on troubled waters?
Okay. The one thing we've got to bear in mind, the markets have already built in to their cost structures and thought processes that this was going to happen. This isn't a surprise to anyone, and there will be increases.
Maybe to Liz Truss, but apart from that,
then there will be increases in rates as we move into next year. Unfortunately, perhaps not now as big an increase as we thought after the mini budget that was rolled out rather calamitously some weeks ago. But the cost of funding is increasing. The overall knock-on effect of that, from a personal mortgage perspective, is still too early to tell.
Yeah. It's got to work its way through.
The media doesn't help. There's a lot of scaremongering, and we might as well give up knowing. Live in a bloody hut in the end of a garden somewhere, because
it doesn't suit the narrative to share what the reality is, does it?
No. So,
but then I think conversely, I've heard from agents where they are going the other way and saying, trying to have a self-fulfilling prophecy of saying, "Oh no, we've seen this before."
I've seen it before.
Obviously, somewhere in the middle is the truth.
Everything is cyclical. In interest rates go up and go down. We've got a generation living with us now that just don't know what interest rates are. They've not existed. We're old enough. We've got the grey hairs to remember interest rates when they were in their mid-teens.
Yeah.
If we get rates now up to 4.5%, and even as high as 5%, that's still a relatively low interest rate environment. Yes, it's a big adaptation from where we were, but the one thing we are seeing in the marketplace is that the cash is available. There are funders out there that have committed funding lines, perhaps at a set cost, that are happy to lend. And we've certainly not seen 2%, 3%, 4% increase in interest rates to property developers. We've seen it to the end users, the mortgage users, the buy-to-let portfolio landlords. They've been hit really, really hard. But from a development funding perspective, rates, apart from those that are linked to base rates, have stayed pretty stable.
Is that because developers have got to keep the pipeline going all the time? They've got a big investment. It makes more sense to keep building than stop and
to stop would be disastrous for everybody involved. Funders won't get their money back if they start pulling cash on sites that are midway through development. As I say, thankfully, the inflationary pressures on build costs have levelled off a bit. There's talk of wholesale prices coming down. So, we moved into the tail end of last year with build prices going one way and one way only, and worried about how we were going to fund developments through increasing costs. So you've had the cost side level off. We don't know what's going to happen. Nobody's got that crystal ball from a property price at the end of a development, but
sure.
People are holding their nerves. Funders are funding new development projects, and with a sensible approach to costs and end values, there are very good deals to be done.
Okay. Same question to you, Kevin. What would your advice be to anybody getting a bit twitchy with
You've got to hold your nerve.
Yeah,
I think you've got to hold your nerve. I don't know if you agree with this, Derek, but I think certainly, Rishi stepping in already just in the first 10 days, it certainly seems to have settled things. The noise isn't there that it was after, as you say, the calamitous sort of mini budget. I think from talking to agents across the country, one summed it up really well to me earlier on today, and he said, where we might have been having sort of 7 or 8 offers on a property, now we've got 2 or 3. Well, one house, you only need one offer to get the deal done. So, I think just the heat, there was such a heat in it. Stock has always been a problem. It's always a problem for any agent. I think that, construction is such a huge part of the agenda generally. Obviously Help to Buy, obviously in its current guise, is no longer from those completions for next year. So I just think we might just head back to a little bit more of a normal market.
Take the heat out of it.
Take a little bit. It got a bit frothy, hadn't it? It couldn't carry on at the pace it was. I think everyone understood that. But I think, at the end of the day, every market makes a market. We're seeing transactions that are going on. Okay, it's just a bit different, but it's nothing that those of us with a bit of grey hair haven't seen before. And right now, I think somebody summed it up brilliantly well to me the other day. The sector as a whole needs a bit of grey hair around the place because it got a bit too easy. And we're going to now have to roll our sleeves up and do some proper deal making and, negotiation on chains and all the other things that go with it. I think from a developer's point of view, buying land, probably the only thing we've seen, certainly in some of the negotiations, is maybe a bit more deferment on the full payment terms if it's a sort of a larger transaction. But, sometimes that's worked tax efficiently for the vendors anyway. So, but other than that, I think it's, we've got to fight on really. It's giving up's not a choice, so...
I suppose I think it's easier to sell when everybody's buying. It comes down to it when it's quieter. That brings out the true metal in people.
I think Derek's point is right. There is a lot of money still out there. There are still people. You've only got to listen to people like Roger Martin fagging. Okay, energy costs have gone up, so things that they might have been doing improvements at home is just now sort of redistributed, that they're having to pay a little bit more on their energy costs or whatever. But at the end of the day, there is still an appetite. People want to get on with their lives. I think if anything that the last couple of years have shown is that actually sitting back and not doing anything, you want to get on with it.
Yeah.
If you want to sit tight, sit tight. But from certainly the landowner's point of view that are sitting on consented sites, maybe they're not in a fortunate enough position to be able to access the funding, or don't have the sort of the balls to do it, if you like, then they're going to flip those sites on, and there's plenty of people out there ready to buy them. So that's probably the difference I'm seeing.
Yeah, and if you look at the you started the conversation around interest rate increases. If you look at the cost impact of interest on a development project, it's not as severe as it would appear.
No.
A 3% increase in interest rates. You don't borrow all your money at once. It's drip fed to you during a development cycle. So 50% of your funding line may be utilised over the course of a development. So that 3% becomes 1.5%. You're only borrowing perhaps 65% of the end value of your site. So
there's a lot of...
Your 1.5% then's condensed even more to almost sub 1%. So the impact on the end value of your development may make as little as a 1% difference. And that's usually negotiated away on sales prices or other factors you can make cost savings through during the course of development. So it's
probably just more of a media... they love a bad news story at the end of the day, so it's good headlines, it sells papers.
Absolutely, but it's putting that realism and reality check back into the whole funding proposal for the developer, and the landowner, making sure, expectations, reprices are realistic. We can have that conversation with both the funder and the developer and make sure there's enough contingency and thought process put into how we present and ultimately deliver a deal for a client that works for everybody.
No, that's good. Ultimately, people come to you with their ideas, or what are the ones that work and what are the ones that you just know from the get-go? It's like, no, this is just...
Yeah, what are developers after? Developers need cash. Funders want developers who know what they're doing. So it comes down to experience. If you're a first-time property developer wanting to borrow 70% of the end value of your project, you will struggle to find someone to back you.
Okay.
If you're an experienced property developer or a contractor turned developer, my job is to present them in a very professional and capable light to funders, so funders want to back.
So you go to the funders, you're the broker.
I provide a funding proposal on behalf of the developer client that showcases them.
Yep.
Their CV, past project histories, the glosses of past sites and sales achieved, costs of delivery, etc. Make sure that the funder is in no doubt that we're dealing with a quality developer worth backing,
not just somebody that's decided that.
And not all are. There's a quick sense check done on a development proposal that soon eliminates those that aren't worth pursuing. And there's a sensible
that is the
conversation
thing, though, isn't it?
to
There's
be
so
had.
many sort of these clubs and courses that sort of portray this get rich quick thing or whatever, but those guys are just going to fall at the first hurdle, or they're paying way too much money on funding, or they're just not going to get it full stop.
They're going to give all their profit away through a badly structured deal and work for nothing for 18, 24 months. And
might be able to say they built a few houses, but didn't make any cash.
Still working at Tesco's.
Yeah.
Okay, well, it's been very insightful. Derek, thank you for your
thank you.
Insight into the workings of these things. For me, somebody who doesn't know much about it, it's been an education. Thank you. And I know, Kevin, you're very well versed in all this, so It's nothing new to you, but you've been very patient with me, so I thank you for that.
Thank you, Chris.
I don't know if you've got any final thoughts that you want to share.
I think, from my point of view, if I was a developer, I'd want somebody like him, in my camp. Because I think to sort of have that ability so I could crack on and do my day job and knowing that somebody's out there finding me the right funding solution that's going to be on the right terms. Devil's in the detail, much like when we're negotiating a land deal, the heads of terms. We could have lots of lovely chats with vendors, but if it's not right in the heads of terms, that's where most deals go awry. So, personally, it's, we've got our first one across the line.
We have.
Good stuff.
Many more to come. And, I know from the feedback that clients have had, Derek, they've sort of very much been appreciative of your honesty and candour around it. So, that's kind of what I'd want if I was out building houses.
Absolutely.
Perfect.
And that initial advice is free. It is almost a free sort of financial health check.
Yeah.
That sounds corny, I know, but it is. If I'm not offering the right solution that works for that client, if they don't buy into me and what we're suggesting, we don't get paid.
No.
So, yeah.
Good stuff. Well, thank you both. Thank you
Thanks,
for your
Chris.
time.
Yeah, thank you.
And well done for remembering to put the SD card in.
Well,
should we?
Let's wait until we've checked the SD card.
Well, I'm confident looking at the back of it.
We've got a red light, we've got minutes on the clock, but thank you both very much.
Tom's done something wrong this time. You can tell. He's just sat there nervously in the corner.
All right. Well, hopefully everybody's enjoyed this edition of The Plotting Shed, and you'll join us very soon for our next edition, which comes live from Kilimanjaro. Thank you.
Thank you.